What's up, Mike? So did you, when you said hello, everyone, was there more than just you waiting in here? That's awesome. I don't know if you could see it from your end. Anyway, thanks for being here, Mike, or anyone else that's here. Let's remember to share the screen. It's probably been a month since somebody's had to call me. I can go look. This is the only time some of you guys text me. It's definitely the only time that 2 or 3 of you guys text me the same day. So I can go back and see when the last time I got 2 or 3 texts at the same time was, and that's when it was. I think it's about a month ago. I'm doing better. Maybe my brain is, maybe my short-term memory's repairing itself. All right, so let's talk. I got a bunch of stuff to talk about tonight. Let's just start with the market. I have a bunch of windows shut, and I'm disorganized as usual, but let me just look at this really quick. You know what really made me mad? I'm down 9.7% in one of my holdings today in my model portfolio. We're going to go straight to that fund. You guys know which one it was. You guys probably know. I should know. I didn't until just now. I looked at my balance. I was up like 13% yesterday, and I'm up like 10 something today. I mean, I was going, what the hell? I mean, how'd I go from up 13 to up 10 and change? Come on, GDX. What in the heck are you guys? Oh, it's just a dividend. Oh, thank God. All right, thank God. So that's a whopper of one, too. Holy cow. Okay, I'm an idiot. What? Okay, so they paid 64 cents last time. $1.03. That's a big sucker. Heck yes. So how many shares of stock will I get? I will get, well, it depends on how many I have. Anyway, whatever. All right. That's beautiful. 61 cents. And look, their dividends going up. Okay, you guys, we're going to, maybe we'll talk about that later, but I'll give you guys, who can tell me the answer to this question? Well, we'll talk about it in a second. All right. It's in the weed option stuff. Let's not get that heavy right now. But there's something interesting about what's going on here, and we could also compare it to MSTR. Remind me if I haven't talked about it, and we'll hit it up later. Am I sharing the screen? Yeah. I always look and make sure this freaking thing's. Hey, did anyone listen to the live spaces I was a part of today with Ambassador? I was talking to Scott Snyder was on there, and I got a chance to ask him about the lightning spread. It's one of the things I want to talk about later. So remind me, and we'll talk about that also. We have a lot of stuff to talk about. We're also going to talk about BITK. All right. So, all right. Well, that makes me feel better. Well, so let's just look at the other stuff here. So, yeah, I mean, So tomorrow I'm probably going to be at a new all-time high, or once it drips. I don't know what day I'll get the actual shares on, but probably not till Monday. Anyway, S&P still up at this hour. NQ's up. The Qs don't trade tonight, of course. NVIDIA. I just love these structural type long trades. Somebody at the top, I've never been a very good trader, but I learned and got a little bit better in 2020, and I forget who I learned this from, but you have, when you make a trade, you have to, before you put it on, you have to know where you're wrong. And I'm not talking about stop loss. That's for money management. That's a different deal. And I don't use those either. It's because that's a long story. But you have to know on the chart, what place on the chart are you wrong? I like those structural chart trades where you trade against the past low or past high. Anyway, I'm sure you guys know how to do that. But right here, trading against this gap, I think, would be a decent NVIDIA trade if someone wanted to take a YOLO maybe for next Friday or something. Buy the 200s for next Friday and something like that. Maybe the 200, 210 call spread or something. Sell a put spread. That's what you could do. You could sell a put spread. Sell a 185, 180 put spread. And if it goes in the money, you're wrong because it means it's gone through your gap. That's actually probably a good way to do it. But I like that unlimited upside. I'll tell you what, sell a put spread and buy a call. There you go. Sell 2 put spreads and buy a call. That's your trade. All right, so let's get back. But that NVIDIA, I like these structural trades. Look at this 10-year, this interest rate's coming down 4.13% and still trending downwards. We like that. We definitely like that. Okay, so let's get over here to LightningSpread. So the LightningSpread report, I'm trying to make this report better, but it's not, I don't know how well it's going yet. But first, I guess before we ever do the LightningSpread report, but I want to ask you guys, anyway, I want to know if somebody heard that Spaces with Ambassador Quan. Okay, so here's a QLDI daily chart. So this is actually showing that it was positive 4 points. Yeah, because it's from the prior day's close. So it was positive 4 on the day, 4 basis points, while the ES is positive 19. It underperformed a freaking again. Anyway, I don't know why it's doing that. It ought to, we'll talk about that, but it shouldn't be doing that. All right. So anyway, so LightningSpread, let's look at blocks too, because we're going to look at blocks and then we're going to look at alt. Oh, blocks is a beast. Look at that thing. Look at that freaking thing. Let's look at alt. All right. Do you guys see my video on KYLD? We can talk about that in a while too. Okay, back to the LightningSpread. I have a bunch of stuff we want to talk about. But if you have questions, put them in the comments. Okay, so back to LightningSpread. So they're up to selling 3 contracts. They've been selling 3 contracts the past 3 days. Each one of these 2 lines is a pair, is a trade. This gray line is the weekend. So that's Monday's trade, that's Tuesday's trade, Wednesday's trade, Thursday's trade. Every trade's a spread, so it has an SS, which is a sell short. It means you sell something you don't already own, and it has a B, and that means B means buy, but that means buy something you don't already own, as opposed to BC, which means buy to close, which means buy something back that you're already short. Sometimes when you use SS, then you BC after it. This fund doesn't mess with BC, so don't worry about BC, but. Anyway, so every transaction will always have an SS and a B. Well, today's transaction, the SS was next to the 25,170s, 25,170 strike. And so they sold that strike, and then they went down to the 25,020. It was 150 points wide, and they bought that strike. So they just sold 150 point wide spread. The risk is 150 points. The reward is the difference between the 2 prices, which is 58. So the risk is actually 150 less 58. So the risk is 98. 150, right. Yeah, sure. I used to be good at math. But anyway, well, the trade can lose 150 points, but you had 58.61 going in. So it's 150 minus less 58.61. So yeah, it's 97 40, or what is that? 97.49? 97.39. Something like that. Anyway, so it's about risk 100 to make 60. We'll just speak in round numbers. Anyway, so that's the trade right there. So and I guess we can see how it came out today. They just let it expire, but let's see where I think NASDAQ, as long as NASDAQ's up, it should always be fine, but it depends on where exactly and what time they put it. It depends on where they put it on it. So it closed at 25,098. So we're going to go back here to the old LightningSpread, 25,098. All right. So it closed a little bit in the money from this short spread, but anyway, so it was a partial winner. Anyway, I don't even care about that. We never even calculate how much it wins. I guess we could start doing that. It really doesn't matter because that's not how they pay the dividend. They pay the dividend based on the gross cost they bring in. Anyway, so for the purpose of estimated dividend, today's came out to about 43%. The average of the past since it started is running about 35%. I caught a miscalculation in my They added more shares, and I didn't catch it. So I put the more shares in. They added more shares on Tuesday, and I was just using the old share account. So when I put the new share account in, the earnings per share was a little bit less. But with all those adjustments, this last column right here, P, is their reserve. They declared a 19.68 cent dividend, just like they did on Monday, like they do Monday and Thursday. They declared it, so I've already taken it out of the reserve, so it leaves 29 in the tank for reserve. Let's say they make another 10 cents per share tomorrow, then they're going to have 39 for reserve. They make another 10 cents Monday, they'll have 49 in the tank. But then what are they going to do? They're going to pay 19.68 again, I would imagine, or 20 cents, whatever. And then you'll have the reserve will go back down to 20, and they're just going to keep rocking and rolling like that. The highest the reserve has got is 44. But as soon as it hit that high, then they had another payment come out, and and then it gets knocked down. But we'll keep an eye on that. I really like this lightning spread, and we're also going to talk about the lightning spread later. I just want to try to get this other stuff out of the way. So let's see. I guess is this even right? Hang on. Worksheet chart. No, it's this chart. All right. Right now, according to my calculations, Qs are outperforming the lightning spread 258 basis points to 251 basis points. It's just 7 basis points difference. But that's just, I mean, I don't know what's going on with it. I still like it and stuff, but I was expecting a little bit better NAV upside. We'll keep an eye on it. All right, so that's it with that. Let's go to the crypto quartet, which I have not. I forgot to update this. Give me 1 second. Back when I used to do those Defiance, you guys probably don't remember, but I used to do the daily trades for Defiance. And it used to take me like an hour a day to do them. But then I learned how to do JavaScript. And see this where it says run and it says process multiple ETFs. I hit that. Saves a lot of work. I still have one thing that's kind of jacked up, but it's fine. Crypto quartet. Okay, so these are all the new. This is all the new data. This is as of the close of the day. It just went and downloaded all the new positions and everything. This consolidated asset changes. I wish this sheet worked where we could. It works sometimes, it doesn't sometimes. So I need to set a filter on it. There's nothing really major, so it doesn't. But Scott Snyder today on that live stream I was on said, be looking for blocks. They're going to have changes today. Well, we'll go look at blocks separately anyway, because this is jacked up anyway. This isn't catch it. So we'll check out blocks. Let's go to LFGY. Or no, I'm sorry. This is ULTY. Okay, so these are tomorrow's holdings with tomorrow's positions, but it's today's prices. So they're all the same. They're all the same. Rigetti was up 9%. Some of these holdings may be bigger or smaller because they may have, adjusted their position. Anyway, but there's no new stocks, nothing to really talk about here. Stock positions. I wonder if LFGY ever does any synthetics. I never really look at the individual positions. Let's just look real quick. I've got pretty good at this. I see a synthetic. I see only one in the whole thing. Or I'm looking for, I shouldn't say synthetic. I see only one lightning. I'm looking for lightning spreads. I wonder if these guys, it's a synthetic, lightning spreads. Not. I see only one put spread. There's a put spread right there. They're on MBTXW. Well, wait, they're selling the 175s and then buying the 255s. So that's not. It's a bearish put spread, not a bullish put spread. Okay, that's a hedge. That's their hedge right there. All right, well, let's go look at some other stuff. Oh, and I forgot to check out Alti synthetic book also. 1010, is that today's? And today's at 1010 because that's tomorrow's position. So yeah, these are the latest holdings. Okay, so let's see. I haven't checked out for the synthetic book yet. So real quick, let's just go through in the check. The reason we know it's a synthetic book is because it's going to have two puts next to each other in the same stock without any calls in the same stock. So no CNC, the one that's in yellow. No calls, no stock, just two puts. So that's synthetic. It's a synthetic caller. Coinbase, no, they have calls in Coinbase, so that's a caller. CoreWeave, no, they have the full thing. Anywhere they have calls are fine. Galaxy's synthetic. It's probably the same. It's probably the same synthetic. HIMS is a full caller. Hood is a full caller. Lucid is a caller. Lulu is a put spread, so that's synthetic. And Open Palantir, Honey, Qubit, Rocket Lab, Rocket, SMR. I thought there was one more down here. No, I didn't see one. Okay, so let's go look. So the synthetic book for Alti. Did you see Palo Alto Networks in there? I didn't really see that one. I wonder if they took that one out. I just covered up this one last night. Maybe I saw Lulu and I saw Galaxy. Let's go back to Alti. Maybe they dumped Palo Alto Networks, but my darn thing that shows me which positions they added and dropped should have caught that, and it didn't tell me about that. Anyway, I'm still working on the programming. Man, if I could just get this to work right, this would be awesome, right? Anyway, so their synthetic book is now down to two positions. We'll keep an eye on it. What that does, though, it ties up more cash, but it also gives them cash if they want to put on a position with stock. It frees up cash also. But let's just do this. Or maybe I should just gray it out so we can see what it was. That's better. I don't know. I didn't think of that yesterday. Okay. Anyway, so right now we have Galaxy, Lulu, and CNC. We have three synthetics. The CNC synthetic is tying up 97 million, but we're getting interest on it. So, and these other ones are tying up 232 million between the two of them. So you'll see that this fund carries what looks like a lot of cash, but it's not all spendable. It's not dry powder cash. It's collateral cash, let's just say. So anyway, but with that in mind, let's go look at these positions, see what we have. Yeah, so Palo Alto Networks no longer in there. It's not on this list. There's no stock, no options. It's done. Okay, they closed that one out. I should have watched ETF Inspector show tonight, and I would have known that, but I didn't have a chance to catch it yet. He's the best Alti authority on the internet. He's the Rod of Alti. Let's see what else. Now Lucid was down 3% today, but anyway. All right, so this is, of course, the daily change. Tomorrow's allocations with today's change, and we've already looked at this, so we kind of know what's going on. Now let's look at, this should have picked up right here, Palo Alto Networks being gone. New is MP. It says that every time. Okay, yeah, this is broken because it always says MP's new and then it doesn't pick up anything that's changed. All right, well, all right, so let's look at, we've looked at Alti. These are Alti's positions. So this is just the stock plus the options together. Anyway, whatever. We've already looked at that. see what allocations changes on blocks said, because Scott Snyder said you're going to see something tonight. I mean, ETHA's down, but that's because the price was down. Those got murdered today. It probably just knocked the price down, and which takes the allocation down. You know, depending on what the other ones did. We're going to have to look at the positions, but you guys are kind of interested in this stuff too, so we'll probably just do it. Maybe adding iron. Iron went from 4 to 5. I mean, that's, you know, it's 1%, but it's really 25. It's a 25% increase. You know, going from 4% of your portfolio to 5%, or is that a 20% increase? I never was sure about if that's 20 or 25. But it's one of the two. I know it's one of the two. All right. I never really was sure about the denominator and the numerator in that situation. I must have been incapacitated that day in class. Probably wasn't paying attention. All right. Well, anyway, we looked at Alti a jillion times. So the next one we really want to look at, let's just look at blocks of stock positions. I mean, those are the names of them, but I guess I don't download previous table. I don't really put the stock. I just have AI put the ones in there. Okay, well, I don't know. We'll look tomorrow. It doesn't look like anything's really changed to me. I mean, we look at this every day. I mean, these allocations are the same. 15, 15, and 10 usually, but this one's down a little bit because I lost money today. I mean, it was down 4%. It's incredible. GDXY paid a 10% dividend because, I mean, the power 9.97%. I'm just saying if all of that was dividend movement, maybe 2% of that was the stock going down also. But it's amazing to pay that huge dividend. That's great. Riot blockchain, iron. So I don't know what Scott was talking about. It was blocks here. So we were talking about the lightning spread. Yeah, it was blocks. All right, salty. Salty history. Let's look at option positions. Oh, here's option positions blocks. I do save the blocks trades. Okay. Is there anything new? Okay, let's organize these. I just don't. Let me just look at this really quick and see what this Taiwan Semi wasn't in there yesterday, was it? Or was it? I have the worst memory. And all of these funds have the same funds. Taiwan Semi's in LFGY, right? Or it's in one of the other ones. Riot's always been in NVIDIA, MicroStrategies. That's just a hedge or something. Or, well, no, that was the one, the other fund, but that's LFGY is using this product, MBTXW, for a hedge. These guys are doing it for something else. Maybe that's what's new in there. Yeah, these guys haven't had MBTXW before. That's what Scott was talking about. Has to be. Okay, so look at this. So what the heck are they doing? Do we need to put it in option strat, or can we just eyeball it? I mean, so this goes out to 10:10 tomorrow. This is a call for tomorrow, a 3:15 call for tomorrow. And they're long it. They bought I don't know what this thing trades at. What's the price of MBT? MBTX, or I think it's called, or it's MBT, micro, yeah, MBT. Anyway, so they bought two calls. They bought the 300 and 310, and they sold another call. I mean, what are these guys doing here? I don't know. I guess I will have to put an option strat. I won't do that now, but well, okay. Let me think about this. Look at these two. This is the key right here. You're in the same amounts. This is a spread. You're short the 300, long the 310. So that is a call spread, a short call spread. All right, and this right here now is another one. I think that's just a part of another position, or saying it's just they're just selling call spreads. But do they own the stock, though, is the position, right? I mean, is there even stock in that? That's just an index. I don't even think you can get stock in that thing. You have to do it synthetically. That's why it doesn't show up in the stock report. Because these are that's not. Those are the stock positions for Alti or something. Sorry about that. Well, no, we'll come back to that. I'm going to have to look into that blocks trade. Maybe I could email. If I can't understand it, Scott told me if I ever needed anything to hit him up, and he might come on the show sometime or whatever. Anyway, all right. Well, what are you guys doing? Yeah, hit the like button. Hell yeah. I never pander for that stuff. Hey, Jonathan, are you still here? Mr. Quan, Ambassador, Mr. Ambassador. If you are, I'll see it in a second. Anyway, because I like lots of times to sign on to Rod's deal just to give him viewership, and then I'll sit back and read the paper. So, or whatever. I mean, and no big deal, or whoever's. I mean, and then like I might not be tuned in, so he may be doing that too. I bet I'm not the only one who maybe signs into a live stream and doesn't fully participate. Nowadays I have to anyway, because if I get on one of his live streams, he'll ask me a question. If you don't want to be asked a question, you have to listen anonymously or just not go. Anyway, okay, I just want to catch up with what you guys are doing. There's Mike K. So you listened. Okay, good. Well, all I was going to say is, this is what I was going to ask Jonathan, if you're still listening. So I was giving Scott Snyder a hard time, but and I thought Jonathan said something like, Jonathan, I don't know. Was I being rude to him? I wasn't, of course, never intentionally be rude to Scott Snyder, but I don't, how sometimes I tend to kind of you guys know, I tend to get excited or whatever. I wonder maybe if I sounded, because I said, what's the deal? I was talking about QLDY, how come it didn't get, it hasn't been getting the upside. And I was totally joking. Like, what's the deal with this freaking dog or so, something like that. And anyway, but I hope they know it was a joke. Anyway, but yeah, what's turning out to be a popular ETF? Is it turning out to be a popular? Oh, I was thinking, okay, so let's look at this. Okay, on KYLD, I'm going to give a shout out to Marcus for coming up with my thumbnail. He's a designer too. I need to have him do the graphics sometime, but that's way below his talent level to do a thumbnail. But that the catchphrase was perfect. He put it in the comments, and Alti is going to get killed. KYLD. That's funny. I can't believe I didn't think of that. So you're thinking 30 for KYLD? Or yeah, I have no basis for that. I pulled that straight out of nowhere. But I'm just basing that on other stuff Howard's doing. I mean, he's doing a great job with KQQQ, but it is a tiny yield. So, I mean, so he's all right with paying smaller yields. I don't know. He's going to, but the whole idea of this one is, I think he's going to do it. Howard's going to do it for us, baby. He's going to give us a 40% or 50% Alti, I think. But you didn't think, well, I know I was joking too, but you just, to direct a question, told him that you always appreciate him to start. I don't think it was being rude, but just a direct question. You told him that you always appreciate him. Oh, yeah. You're right. I think so. But then it was Jonathan's reaction I was worried about. What's his name? What's his name? Scott was fine. I mean, But Jonathan said something right afterwards, and I didn't know maybe if Jonathan thought I was being a little too crazy. It's Jonathan's live. I don't want to get on his live and start acting like I do on one of my lives. I mean, we can be crazy in here, but anyway, I don't think that's what happened. I just want to make sure. Because that's actually, it's part of my short-term memory problem. Because I said something, and then Jonathan said something, and I tried to, and I couldn't remember exactly what I said. And so I was wondering, did I anyway. So it's probably not a big deal. But I was just going to apologize to Jonathan if I was being too crazy on his live stream. Because some people want, more professional behavior and stuff. So I get that. But anyway, I like your opinion too, Mike. Okay, so let's do something else. So yeah, I was so discouraged because I was looking at my tasting because I lost all my. I was up like 13% yesterday. How can I be, and I was so happy that this GDXY was X. I guess I could have looked. It says X somewhere, but anyway. But so let's look at the model. Alti was down 1.6, GPTY down 2 basis points, GDXY 9.7, WPay was down 2. I never remember to check WPay just because I don't do options and stuff. It doesn't seem that interesting. I mean, all you're rooting for is the market to be up, I guess. I mean, market's up, you're good. I mean, it's pretty much on all of these, but I mean, you're basically. Misty. I just don't have the heart to sell that one. It's the Misty Mafia is why I won't sell that because I meant to sell it all, but then when I didn't sell it, I was like, yeah, Misty, there's something different about that. It was probably about the time that I was starting to meet Jonathan and he likes it, and so I'll just keep it forever. YMAX. I really don't see how I could have. I bought YMAX was the first thing I bought. It was last December. The whole portfolio's up. Well, I bought it for $14.52 and it's sitting at 13. I can't believe it hasn't recovered its price. Because it doesn't, I guess it does pay a pretty high dividend. I'm sure including the drip, I'm fine. I mean, obviously the whole portfolio's up. And I busted out of that also whenever the market was going to crash. I had to dump YMAX, Misty, and some other stuff to buy YQQQ and GDXY. All right, so Coney, let's see, AMZ up 8 basis points. USOY, let's see, USOY down. Who cares? YQQQ was up. Boy, my hedge really wasn't hedging that much today. I mean, that's fine though. I just have to remind myself it's always accumulating an income. I mean, heck, this one's an inverse, and it just went from 16.5 to 12.5. A little bit more than 12.5. That's not too bad on NAV, and it's it's not. I mean, it's bad, but I'm saying, but that's that's not much worse than YMAX is doing. Anyway, all right. So look at blocks even. So which one was up the most? AMC. All right, I'll try to turn that into a spreadsheet feature. All right, let's start talking about stuff. So who heard so Mike, you heard the podcast. Did you hear what? Dude, that was a great, Jonathan. If you're still here, that was the best one of the year. That was the best one I've ever been involved in, but I haven't been involved in all the ones you guys have been involved in. But that was a really, really good show. Trying to think, the big news Mike made. There's several things I wanted to talk about, and now I can't remember. LightningSpread. Scott said they put the put spreads on in the morning. He gave me some answers. I didn't. Be honest, they didn't totally satisfy me. Scott, if you're listening, but I wasn't, but I'm not as smart as Scott, so I just kind of said, but I wanted to listen to him back and then think about him. But I mean, there are things that made about half sense, but Mike, maybe you can help me if you remember, but he said it has to do with what time they sold the put spread, because they sell it in the morning. So it has to do more where the fund opened than with where the fund closed. And I totally get that. But at the same time, I'm thinking in my head that my charts are also comparing that same time frame. I'm looking at that. I mean, I don't think that's it. I don't think that's it. And then he said something, if it has a big gap up, and now I do get that. Yes, maybe that's the path dependency argument, like a day, maybe like 2 days ago, where NDX. Yeah, okay, let's look at that. I could definitely see, you open on a gap, you sell a put spread, close on the lows of the day. Not only is your synthetic going to lose money, your Lightning Spread is going to lose money, but the market lost money that day. I'm talking about days the market goes up. Maybe if it opened in a down gap, I don't know. Maybe I'll re-listen to it again. I guess we could go play the replay, but anyway, we'll get to the bottom of that. I can email him and follow up. And I've thought about asking Mike Coe the question, is sending him an email. But I mean, and I've given you guys an answer, but I'm not totally satisfied with my own answer. So we're going to have to work that out. Anyway, I'm going to see what you guys are saying, if anything. Mike, if you heard that, feel free to chime in. Oh, yeah. He thought I was too direct. Okay, yeah. You'll have to re-listen as well. Yeah, okay. Well, I need to tone it down a little bit then. I mean, all right. Yeah, that's what I was afraid of. And I didn't mean, of course, that wasn't my intention. He probably also doesn't know, because I haven't told anybody that, I'm trying to think I want to tell you guys now, but I've been communicating off and on through email and Twitter DMs with Scott. So I have a rapport with them already. It's not the first time we spoke. Maybe he thought it was the first time we spoke. I did introduce myself because he's never heard my voice. So when I started talking, I said, "Hey, Scott, Max Convexity here. You're doing a great job. Appreciate you." So just to make sure he knew who it was, but maybe Jonathan thought that's the first time we ever talked, and then went right from that to, why the heck's that damn spread doing so bad or something. Yeah, I guess I could see that. All right. Well, anyway, yeah, I know it. And Jonathan does too. So I don't think it's any big deal. I think that's what it was, though. Jonathan probably thought, because he's kind of the boss of the show, he has the two biggest shots. And really the biggest shot you could have on, in my opinion, Scott. I mean, even bigger than Jay. Once we get to Scott, we're at the epicenter. That's ground zero. So not that Jay and Mike aren't important too, but Scott's the man that pushes the button. Maybe that the fact that, he has a special guest on his show, then I come on the show and kind of act bombastic or whatever. I mean, yeah, I could see that. But anyway, yeah, I've actually asked, I don't think I told you guys yet. I think I told BR or no SB. I told one of you guys, but yeah, I was on a live stream and Scott actually DM'd me, slid into my DMs and just said that I was doing a good job, or that I gave an opinion on something, and it's something complicated. I forget what it was. And he live while I was on the air said, yeah, that's exactly right. I got it right, or whatever. So then I said, well, hey, I've always wanted to, have you on the show. Would you like to come on the show? And then we're working on it. So anyway, all right. So that's the one news, was the Lightning Spread. There was some other big news made today on that show. I wish Jonathan was here. He probably fell asleep. I don't blame him. All right. So let's go look at some other stuff. I'm going to get out the Max Factor, the new Max Factor, and I'll remember that when I start doing something else, then I'll remember the other stuff. That's what I do whenever I lose my wallet or my keys, is I quit looking for it. Because if I keep looking for it, I'll just get frustrated. And anyway, but if I quit looking for it, I'll find it by accident. So, this thing takes a while to load. So I need to remember, I need to open it as soon as the show comes on every time and reload it. Anyway, but so we'll talk about some other stuff, and we'll come back here and we'll reload it. So now let's go look at this. Here's something I'm really enthusiastic about. Maybe I need to start doing some content like this. And I tried to do this a while ago, but maybe I need to start doing some option content. I really like those earning trade content, But you guys all know as much about earning trades, more about earning trades than I do. No one was really doing my trades, which is fine. You guys, you do your own trades, and you guys are all self-sufficient on earnings trades. But it would be, it's fun to have a feature or something. Maybe we'll start doing, I wondered, maybe I'll start doing them with my own money too. And then we could, just for fun, but maybe start trading the daily gaps or something. I'm trying to think of new. It was like that NVIDIA one would be a perfect one. We could look at it in the morning, and then if it's still there by the end of the day, sell a put spread or buy a call spread or something, and follow rules, just a rules-based thing or something like that. And that maybe that's something that you guys aren't doing anyway. That would be supplemental, but yeah, I tried to show earnings trades, and I have my own way of doing them or whatever. But you guys all have your way of doing them, and you guys are definitely self-sufficient on that kind of stuff. So maybe we'll start doing that. We'll start doing some little swing trades or something with the structural type stuff. I really like order flow and trying to time. Maybe that's it. Maybe we'll try to prove we can time the market, even though I don't think we can. I think over a long enough time frame, unfortunately, we'll see. I mean, maybe not. Maybe we can. All right. So I was going to look, but just on, let's look at something really quick on that NVIDIA. Let's look at that NVIDIA trade real quick. Let's see what the options are priced like and stuff. I guess we could use Tasty Trade also. The Tasty Trade's more fun when the market's open because you got the live bid ask and stuff. This is fine for after hours. Okay, so the perfect structural trade to me would be putting a put spread on the other side of this thing, using the proceeds from the short put spread, bull put spread, to buy a call on the other side of this thing for next week in case the trend continues. And if your upside will be unlimited because you'll own a call, but you're also going to sell a put, so you might bring in some premium. But so the problem with these trades, I've done these a jillion times. It may look good on a chart, and then you go here and you look at and the strikes may not work. You may get the strike you want to use may not pay enough to be worth it, and then you end up having to put it too close. So anyway, so it's just one of many ways to look at it. But I think what would be, just from a structural standpoint, if it takes off this previous low, it's for sure done. So if they have a 187.5, that'd be perfect, or a 185. That's going to be our short leg. And then our long leg could be whatever. We set it for the risk and reward. So, and I want to go out till next week. We don't have enough time left in this week. So, and they do have 87.5s and 85s. All right. Don't just do 87.5. Is that's $2.36. Let's do a 97.5 or an 87.5 on the other side. Or 77.5. You guys know what I mean. All right. We'll do that on the other side. And so what would this trade? So we bring in $236, spend 76. That's perfect. And the risk is, the risk is 10 points. That's fine. All right. So we can also look, that's actually though, when you look at it, I'm a visual guy. I don't like the looks of that though. It's not enough. That's the problem. These market makers price these options so darn good, or they price them where they're just expensive enough to be a bad deal for you. But anyway, okay, so let me rethink this. Tasty Trade says get a third of the distance between the strikes. Let's move the strikes in to the 190, 180 level. That's close enough. 563, 200. It's not good though. See, so really to do a trade where the math works out, this is actually a good example. So to do a trade where the math of the spread works out, it looks like I'd have to do the 192, 185. So let's go back to our chart. That really would be, that wouldn't be the worst trade but it's not as good. But it actually would be, because even if it gets back into this gap, we expect buyers to be there. So we really need to put it on the other side of the gap is the whole idea. So I don't know. On that NVIDIA one, maybe I would, you got to stick with your guns and trade the chart that's in front of you. I would probably just maybe buy a call spread. Then your upside's capped, though. Something like that, though. I don't know. Then you need the market to move. I don't know. I'd probably pass on that trade. NVIDIA is probably going to keep going up, but the options are priced right. Anyway, maybe we'll start doing some content like that. You know, yeah, okay. Mike will be there for it. Mike's all about it. Hey, working investor, what's up? Now, you were there at that live stream today, right? Were you asking, you were asking that last, was that, yeah, it was you. You were at, and I'm glad you're here. I wanted to talk about that. Okay. Tell me if this wasn't you, but I think now I remember that. You were saying you like the lightning spread and stuff, but you wanted them to do the options further out of the money. And this is my favorite topic in the world. Anyway, I was going to break in and say something. I tried to, but they didn't hear me. And then I was going to try to plug this show and say, tune in tonight and I'll explain it. But this is my favorite thing to do. So it's to teach the theory of options. All right. So let's look at this. Let's go back 12 months. Let's go back 12 months. Let's look at the SPX. All right. And let's do I don't like debit and credit. It reminds me of, okay. A credit put spread, a bull put spread. Come on, a bull put spread, a credit put spread. Yeah, a credit spread. I used to call them credit spreads. All right. So, but now this is a great topic. Okay, so here is the deal with this topic. Try to think the best way to show this. You were saying way out of the money, and I get that. I love way out of the money. I'm with you on that one. I'm trying to think the best way to show this. Okay, so this one is an example of way out of the money. It's a 15 delta and a 10 delta. You're selling the 15 delta, buying the 10 delta. The 15 delta will be more expensive. Oh, and we're going to simulate the lightning spread. The lightning spread is doing this in ODTEs, right? Yeah. And we can't do an ODT because you could do a 1DT as close as you get, but it makes it right at the end of the day. It's actually exactly how some of the funds do it anyway. It works for the theory of it. It'll still work. So you could do your 1DT. So these right here, a 15 and a 10 in SPX. Okay, let's look at that. Maybe I can make the point better with this too. Okay. SPX. Okay, so switch to put. Okay. Oh, I know. I wanted to talk some gossip too. Remind me later. I'm going to talk about something else that pissed me off, and nothing with you guys. I mean, about another influencer. We'll talk. All right. So let me just show you what this spread looks like because we get an idea too. This will tie in with my other topic as well. You guys, if you guys already know this stuff, my apologies. Maybe somebody, you guys in the comments might know this, but maybe somebody watching doesn't. So what do we do? The 15 and the 5. That's the 15 and the 6. All right, close enough. We'll try one more. 15 and the 5 on the nose. Okay, so let me show you what this looks like graphically. Okay, here's your risk. Or no, here's your risk. And here's your reward. All right, and now, it's just like I said about the last one. What did I say? Tasty Trade says get a third of the distance. I mean, a third's the general. So, I mean, you're taking a lot of risk for a little tiny reward when you do it like this way. But you made the point. You said your percentage is high, and you're on base all the time when you do it this way. Because when you do it this way, and like I said, I'm sure you guys know this, but when you do it this way and you don't follow the Tasty Trade method, you create a larger buffer. The buffer gets larger the further out of the money you go. But anyway, so so that's the trade right there. So now let's just run it a year. And this is an everyday trade. Every day. Heck yeah. We'll just run it. No stop loss. There's no management needed. We just let it expire, right? It's either going to make us money or not. But the other thing is the 15 delta means we ought to win about 85% of the time. Maybe a little bit more because of put skew also. So here's the thing. This year, that strategy would have had a big drawdown in April. Would have underperformed buy and hold. All I was going to say is the ones where you get, but the good part about it was, yeah, you win 88% of the time, lose 11% of the time. So all I was going to make the point is there's a difference between batting average and slugging average. If you're a baseball guy, there's a difference between win rate. It's great to have a large win rate, and I learned this from Tasty Trade. But there's a difference between win rate and expectancy. This one doesn't have that great of an expectancy, at least not over the past year. Now let's go see if we moved it. Let's just move it at the money, and we're going to make it the same width. We'll do just 50 by 40. So a 50 is at the money, and we'll do it by a 40. And I think this is about what they do, or generally. I mean, they depend. There's some in the money, some at the money, some a little bit out. It depends. Also depends on what strikes are available and stuff. They can't always get the strikes they want, so let's go see. So this one ought to have a bad batting average, but let's see if it has a better expectancy. And it may not. I haven't run this test before. It may even do worse than the other one. I have no idea. But yeah, so it had a worse batting average and it had a worse expectancy. So let's look at let's look at the details. Okay, so this one you only got on base 57% of the time, and then you never scored or whatever. And then you didn't convert it into total, scoring. So you didn't convert it into total return, heck, because you were negative. So yeah, in that case, this past year, you would have wanted to do it your way, the deep out of the money way. Let's do it the past 2 years, and let's go back to your way, or to the way you suggested. Because I've tested this a bunch before, and let's run it back 2 years. But you can see it visually. You make money most days, but this is the definition of the stair step up, the elevator down. Okay, so over 2 years, still underperformed by about half, but had an 89% winning percentage. Great job. All right, so now let's move it 50, 40. Another win for the deep out of the money. All right, let's do this. Let's switch it to, sometimes they sell in the money. Let's switch it to 60-50 and see if that helps this one. Because the 60-50 allows them to get upside from the market going up, in addition to the upside they get from the premium. All right. No, it still didn't do as bad, but I think it's doing better than the other way. I'm going to start testing like this. Okay, so this one you have a lower percentage and a lower expectancy. All right. Let's run it back 5 years. That's 2021. It did great at the end of 2021, but then in 2022 it cratered. It went from being up 8,000 to down 4,000. That strategy cratered. Now, I was honestly expecting the ones that are closer to the money usually have better expectancy. Lots of time, if you take too far out of the money and get like a 95% win rate, the wins won't offset the occasional big losses you have. Oftentimes, it's not working out on any of the examples I've showed you so far. It's almost like I'm putting in something wrong, because usually this back tests great. Selling the 60 and buying the 50. Yeah. Okay. Well, let's go. Let's look at yours on 5-year. Yeah. But anyway, I get you probably have this also. You probably run this same back test. I know that Granite Shares was doing these like this, the really far out of the money. They weren't happy and they were losing NAV, and they switched to the closer in the money and they started doing better. And I know most people say you do better at about between 40 to 50 to 60. But I mean, I haven't been able to demonstrate it yet. I'm all about data. So let's look at this deep out of the money. I wonder if maybe like a 30-20 isn't the best way to do it, or a 35-25. Seems like that's the way Blocks does it. Sometimes they'll do it, a strike or two out of the money, but not like far out of the money, just like a little bit out of the money. All right, well, there you go over 5 years. That one, that far out of the monies, has a losing record over 5 years. So this is an example of what I was trying to talk about. But I'm just saying you can have a poor expectancy, great hit batting average, and a poor expectancy. Let's run it since inception. We'll go talk about something else while it's running. Let's look at the max factor. But we'll run the far out of the money since inception. Yeah, but I expected that the closer in the money ones would do better, but they didn't. But like I said, maybe we should go back and choose one in the middle. Maybe that's too far in the money. I don't know. All right. Sure, looks like this worked. Look at this. Well, heck yes. Heck yes. Okay, so how is it sorted? Okay, for some reason, it always puts the wrong one at number 1. I don't know why it does that. But anyway, sure. No, this isn't right. There's no way XYLG is number 1. I do buy Blocks being number 1, though, number 2, and YMAG. Did XYLG squirrel their way into number 1? That's ridiculous. It's not right. They paid a special dividend. They don't really yield 23%. If I change this to what they really yield, they'd be lower. I just never do it. Disregard XYLG. Number 1 is Blocks. I always say that this list is hand curated, and it is. I'm the editor of the list. I just edited it. Number 1 is Blocks. Number 2 is YMAG. Number 3 is Aptly. I like to see that K gold there. I was so mad earlier when I thought GDXY was down 10%. I was like, I can't believe I didn't get K gold when I said I was going to. Look at old TLTW. This one is stealthy doing, this one doing decent for it. There's KQQQ. I know we like that one. There's some weird ones in the short term. I'm thinking this is broken too. These are, Blocks should definitely be in the short term, because Blocks has gone from 22 to 27 and paid a 24% yield all the way. That's what we're looking for, right? If this other one was right, it would be fine too, because it's gone from 27 to 29 and paid a 23% yield. So I get why it's there. YMAG, on the other hand, has gone from 15 to 15, but paid a 50% yield. Aptly's gone from 13 to 14, paid 34. I get it, I guess. K Gold's doing well. It's up about $4 in NAV. Look at that NAV return, 16.78%, 11.3% return. Heck yeah, K Gold. TLTW, I just don't get, I guess the yield's up or something. It usually doesn't get on these lists, and it just doesn't look that great. It does have super low volatility. It's only a 6 vol, so That probably has something to do with it. That's also what gets XYLG so high. Anyway, well, what really gets XYLG so high is the yield that's not really there. I wished XYLG yielded 23%. We'd all have it. It'd be a great fund. Let's see what else. Global X is, I mean, they're a good company, and they have some other good ideas sometimes and good literature. They have a great website. I like take triple Q being on this list. It's up 8% and paying an 8% yield with a relatively low vol of 14, but not super low. SEPI's a good one, and there's SPUT. This is just kind of a weird list. I'm still not buying some of it. There's got to be some that are still loading or something. I mean, there's certainly, I don't see any though, huh? Well, the market's, maybe it's kind of going through some things here. Look what's number 19. Why did I get this thing? That's not what you'd be asking yourself right now. This thing's gone from, well, it's flat. NAV's flat, but it's paid 12%. That's just not that great, but it has, I guess it's a closed-end fund, and it has virtually no volatility. It's the volatility of like a bond. So really, for that low of volatility, that's not a bad yield. Do any of you guys have any why? Why did I get this thing? I know that a lot of you guys have or are interested in CLM. It's on the list too. It's doing well. All right. So that's the short-term max factor. Let's rank it by the long term. We're going to go look at that back test while it's loading. Since inception back test with the deep out of the monies. Okay. It would have underperformed buy and hold. Max drawdown was in 2025, or was April of 25. That was a nasty pullback. I mean, it was quick, but I mean, it was nasty. The one last August wasn't super pleasant either, the way I remember it, but nothing like this. That April one was, I mean, look how many times in a row I mean, let's look at this. Let's go to the logs here. It would take forever to fast forward through these. I wanted to show you, and I don't want to go that far. They're going to, I bet they lose. I wonder how many times in a row they lost. And not just little losses, giant losses. What day? That was probably April 9th. Look at that loss. That was, anyway, but it's, I mean, you know, so I want one more shot at proving that you want to sell them a little closer in the money. We'll do it since inception. Yeah, okay, I'm going to go that this one for sure is going to be profitable. 40-30. It's out of the money, not too far. Maybe we should go a little bit further. 35-25, and that one's gonna print money. All right, I'm gonna go over and see what you guys are talking about. All right, here we go. We've got Jonathan back. LightningSpread's executing on it. I'll look at these later. But you're talking about the same stuff I was talking about. Exactly. So you're saying you were pushing for, I know you were. And I was trying to show you it's a bad idea and it's not working out for me. You're right. You should have done it. But no, I was just trying to make the point that the super far out of the money can you at least a high batting average, but you do have problems like, and you saw what it looked like in 2020. But yeah, that has great potential. I love the LightningSpread. I love the LightningSpread. You also get defined risk with better odds. No capped upside. I'm with you on that. Defined risk, not on the LightningSpread itself, because you're also long the stock, but defined risk on the spread. I mean, I'm with you. I think the LightningSpread's the greatest thing ever. I'm saying that you want to sell them closer to the money. And I'm saying you want to take, you want to, when you get up to the plate, you don't want to bunt every time. You want to throw them off. So you get the plate, you need to hit for power occasionally. So you get some doubles and triples along with your singles. That's all I'm saying. So the way to hit for power when you sell options is to move it closer to the money, because I'm trying to think. Actually, the analogy, You're hitting for power, actually. Why? Because you're hitting for power. You're saying, no, you hit for power, you take the lower percentage. I'm just saying, look at total return. So what are you guys doing, Jade Lizards, with the calendar spread? Anything calendarized is awesome. It doesn't mean it always works out, but yeah, and I'm a big fan of you, Working Investor. Why don't you send me a link to your channel? Have I ever seen your content though? I bet I have. There's so many YouTube channels out there, and when I watch other people's YouTube channels, I just either get FOMO, and so I don't always. But anyway, I bet I've seen some of your stuff. But yeah, I know you were. Like I say, this is correct, and so far it's working out. Yeah, you were saying get up there and put them far out of the money. Oh no, that's what I'm trying to say. You're saying take the higher percentage, so you aren't hitting for speed. Yours is hitting for is bunting. All I'm saying is you want to mine is the opposite. My idea, but we'll see. If I'll shut up, I'll never mention it again if it doesn't beat your idea on this test. Holy cow, that's running really slow. Usually it doesn't run that slow. Anyway, that's fine. We have other stuff to do anyway. Look at this. The max factor's done loading now. I have the long-term max factor loaded. We'll have to go down here to the first one. Palti. Wow. All right. Now this looks more like a max factor list. Why weren't any of these on the short term? Are these doing bad in the short term? I just don't get that. I think there's something jacked up on the list. I mean, because Palti should have been, I guess to be fair, it's down this quarter. So that's going to knock it off the short-term list. Okay. But TSLP should have darn sure been on the short-term list, right? Something's wrong with that. The short-term list is wrong. There's no way TSLP wasn't on the short-term list. I mean, that's just ridiculous. There's something wrong with this. Anyway, this list looks right, though, so we'll just use this list. Palti's number 1, TSLP's number 2, Tesla's number 3. This is the list I was expecting. Lists like this: Snowy, Maxi, GDXY, Goop, Bobo, OARC, AMD, YBIT. All right. You know me, I like the index ones. What's the first index one? I don't care about the single stocks, and it's great that we have them. But the first index-based one you can get is old Howard, our friend Howard there. KQQ. I mean, it's gone from what, 26 to 30 in a year, paying 8%, 24% total return. Where something like QQI, we were looking at it today. It had like it's not been great total return, not great at all. KQQ is something else. Let's see what the second highest rated indexed one is. I'll come back and look at the rest of those comments. I just want to make sure that there wasn't anything going on. YMAX, okay. I was bitching about my YMAX results, but even in here, they're down for the year. They're down for the quarter too. So that makes sense because in my portfolio, they were down, and it just doesn't seem like they should be. But obviously, yeah, they should be. Not much, but I mean, they're down slightly. Still, though, a 14 vol, that is a lot of bang for your buck, though. Altis, the ultimate bang for your buck. We have a 17 vol, and it's yielding 126. Of course, yield isn't anywhere close to total return. We have to look at that, too. So look at total return. We need to first compute the NAV return. Well, that's not great. Quarterly's down 12%. That actually is about what I budget for, because I budget 50% a year. An eighth a quarter is about right. I mean, and then you can budget that for anything, paying 126 and you're fine. But yeah, so actually 12 a quarter is actually about on pace with that one. Total return for the year, 14.7. Hasn't done as well as Howard's fund, KQQ. Of course, it hasn't paid near as much, but this is an example of the yield's not free money, because you could have taken all this yield, but you wouldn't have done quite as well as you did in KQQ. And I think it's a fair comparison. They could both move stocks in and out. They're both tech stocks, and you do option strategies on them. So anyway, I probably need to put some KQQQ. I'm a yield chaser. I'm doing what I tell you guys not to. The only reason I haven't put it in there is because of this 8.64. It's stupid. It's stupid, but I just figured that these ought to at least be able to pay a little bit more. The lowest yield one I'm going to get is this one. Let's go see where I want to talk about. My favorite low yield one is Big Y. So let's just compare KQQQ, Big Y, Triple QI from Defiance, the one I was talking about. That I'm kind of disappointed with. Let's see. Well, Triple QI, because everybody loves it. And it's a good one. We'll run back a little Alti. And T-Spy, because everyone loves it. What was the other one I kept saying? Oh, yeah, the one I love, which is doing terrible on the Max Factor, Big Y. It may not have been out a year yet. The ones that have been out less than a year up at the top, it puts them at the top. There it is, Big Y. So this one may not be fair to compare because we should have selected ones that have all been out a year or all not been out a year. All right, well, anyway, this has kind of become a nightly feature. Copy this to another page. Okay. I do this every night. It's not that big of a deal. We'll figure it out. All right. Well, first of all, I want to figure out so Biggie wasn't on the list because it hadn't been out a year. So if Biggie had been out a year, let's just say that it had. We'll pretend that it went from 49 to 52 in a year's time. So up 5% NAV in a year. Not great, but if it paid at 10.69% yield in a year, that's about a 15, 16% return. So, I mean, that's competitive. It'd been more than Alti, more than T-Spy. This is total return right here. And this is just the past 360 days. So lots of times, I mean, depending on how the days hit, if you can be, because sometimes I'm surprised sometimes why some are so low, but maybe it was just it's been a bad month, or well, I don't know. That shouldn't affect it. Maybe the time they started a year ago, they happened to be particularly high or artificially high, and I don't know. The good thing with the index is they don't do that kind of stuff as much. So the best index-based one, just numerically, the best performing one, definitely be KQQQ, and that's why it's highest on the list. It has the most risk most reward for the amount of risk you're getting. I mean, because your reward's right. Jackson, you better not even think about it. Because your reward's 24%, your risk is 14%. Your yield is low, but yield is not, total return. These other funds are great funds. Look at Triple QI. It's gone from 52 to 55 in a year and paid a 13% yield. So, 19.51% return for a year. Hang on. All right. Wonder how long before Jax is back. When I shut the door, he usually comes back and barks. All right. Well, anyway, they're all good. Which one do you guys like? I just really like Big Y. But, I mean, it doesn't just the math of it. It doesn't look that much better than the other ones. What really blew my mind about Big Y is this test. Because it's not one that I've ever really looked at or thought about. Let's see. Dividend, yeah. And well, Big Y and SPY, I mean, okay, well, that's not right. Whenever it does that, it means there was a symbol change. Something else used to be called Big Y. All right. I mean, it doesn't get much closer than that. Now, that's off the April lows. You know, I mean, that's pretty dang good. You know, it's beating T-SPY, and everyone thinks T-SPY, they always say it doesn't decay, no NAV decay or whatever. Like I say, there's nothing that doesn't NAV decay us. But that's what people think. That you know, anyway, whatever. So, I mean, they say that about triple QI also. Triple QI is beating it, but not okay, but triple QI is not fair. Well, I'm trying to think. Okay, well, triple QI is beating it, not by much. Biggie's more SPY based. Biggie is SPY based. It's the biggest 50 stocks in the S&P 500. So it's big cap SPY. So it's not totally fair to compare it with triple QI. Triple QI is a good one. No one would dispute that. It went from 42 to 54. That's what people are. Hang on, there he was. I knew he'd be back. I knew you'd be back, Jackson. But yeah, it has had great NAV performance. 42 to 54. Big Y though, 40 to 52. Good NAV, the great NAV performance. But also, to be fair, both of these are the low-paying ones, so the low-paying ones have better NAV performance. So we ought to expect it. Here's what's impressive, though. There's one other one that people say doesn't decay. There's three that no NAV decay, no NAV decay, no NAV decay, that you always hear constantly on SPY, triple QI, and T-SPY. And like I say, they're great funds, but you know, Big Y, which is SPY based or S&P, it's more S&P based than it is Q based, and SPY also paid a lower dividend than Big Y is like free money compared to SPY. And SPY is great, don't get me wrong, but it got beat on total return and on yield. Oh, you know, so but that's just off the April lows. Let's go back a little further. Oh, that's probably as far. Oh yeah, they introduced Big Y after the April lows. Those guys, how about the timing on that? Did really Big Y come out April 8th? You got to be, I didn't really realize that. There's no way, because I usually set this calendar for April 8th because I want to measure off the lows. But it says here it's set to, I'm going to change this. I guess that's when it came out. Well, those guys, I mean, those guys, tell me those guys aren't sharp, because they can pick when they introduce these. They file for them, and then they get approved, and they might hold them for, you know, a day, 2 days, a month. You just hold them. They might hold them forever. There's ones I think they filed for that they never do bring to market, but they have in their back pocket. Anyway, look at this. Big Y's been out exactly half a year. You know, we just got so let's do a 1-year projection on this. So if this continues, they're going to go from 40. Well, if this continues, let's see, what's that? 12? That's like 25%. They're up about 25% on, we'll call it 20% on NAV. So their NAV would be up 40%, and they're paying, what are they? They're a 12% target fund. 40 plus 12 is 52. So they're on pace to make a 52% total return. This calculation says 35. So I may have miscalculated my head, but whatever. They're on pace to make a really nice total return. Oh, no, annualized, 70. Yeah. So it's somewhere between 50 and 70. And, you know, that's if it continues, but that's impressive out of a target fund. Any of you guys have Big Y? Yeah, I tested SPY eye. Biggie does look pretty decent. Okay, Will is almost free money. I know there's a lot of these that are when the market's going up. There's ones that are okay. It's basically back to black after a year of payouts. Oh yeah, you mean it's paid itself off? No, that's great too. Well, that depends on the path dependency. I mean, that depends on a good yield and a good result with the underlying. You know, these things that pay 50%, if they can have a 2-year rally, you know, if you're in Palantir or NVDY, and a rallies from 2024 to 2026, and you catch that, you know, you're in it. Yeah, it's free money because you're going to make, you know, whatever on the market, and your yield is just basically free money. That's the way it's supposed to work out. You like Curve. Everyone wants Curve to switch to weekly, Stuart. I'm with you on that. Maggie does seem decent too. And I like Maggie just by looking at the prospectus, and I forget why I liked it. But yeah, and it's been performing really well too. So I'm just trying to catch up. So you guys are saying with me too. Did Jonathan say, Jay Lizard, I'm back. I care. We care. Nice to see you, Ambassador. Okay. So Ambassador saying he did a Jade Lizard. Oh, with the calendar spread that we talked about. Oh my gosh. Yes, I remember that. Okay. Well, I want to talk about that some more, but for now, let's look at, let's go back to our back test. Okay. So this is the first time I've won. I mean, this is what I expected from the get-go. This is the way it typically works for me. But when you sell closer to the money, you have a better total return. Your expectancy is different than your batting average. It's not only how much you win or how much you lose, it's how much you win when you win versus how much you lose when you lose. That's all I was trying to say. So on the details of this one, you take a lower win rate. That's what I'm saying. So you hit more for power, you swing harder, you take a lower win rate. But when you do win, there's some gigantic wins in there. You know, so you have more money at the end of the term. Money's how you compound, and this one you outperform buy and hold. I mean, or you didn't outperform. Well, let's look at this. But you did well. You outperformed the other strategy. Come on. Maybe I was going too far in the money those other times. I'm just going to hit new back test. I'm going to go back to a year, and I want to test the year one with the kind of semi out of the money. See how it does. All right. Well, it's frozen. So let's see what else we had to talk about. Let's see what else we had to talk about. I'll just see what you guys are saying. Biggie launched in. Okay, so we hit SPY eye, but okay, so you base your back test Q doesn't work. So base on your back test Q. Okay, what do you mean base on my back test? Oh, based on my back test. Well, no, QLDY doesn't. No, I'm just based on my back test. My strategy doesn't work. I'm saying that. Well, no, and that's not true at all. And that's something we do. That's a good question. Yeah, that's actually a good question. That's the second part. I didn't think about that. But yeah, based on my strategy, they need to be running. For one thing, they maybe want to be running. His is working better than mine. But no, I wouldn't say one works the wrong thing because we weren't testing both sides. Remember, the lightning spread strategy is also a long. So no, the lightning spread absolutely works. That was only the spread, the income component side. So, I mean, but they have to exist together and stuff. We'll look at it, but no, not at all. Not at all. I wouldn't be in it. I put my own money in it. This thing is going to be killer. And if we find out for some reason it isn't, there's a jillion other ones. We'll switch it. But I'm saying, but now I don't think that at all. So Biggie did launch in November. Something was going on with this dividend calculator. That's fine though. I thought that because it was too big a coincidence. Anyway, Biggie's good. You guys get what I'm saying. Biggie's a decent choice. There's other decent choices. Triple QI looked really good also. You know, Triple QI looked great. I mean, there's tons of good choices. And who disagrees? Marcus disagrees. You hope Curve stays monthly. So here's the deal. I think they almost have to because they do the monthly time. I mean, that's kind of the way Jay acts. Jay says if they have to pay in the same time frame they're getting they're in. That's why they can do these 0 DTs. They could theoretically pay daily. I really think so. You're seeing Defiance pay twice a week. But you know, so on the curve, here's what I wish. I'm going to split the middle between you guys. I wish they would become more liquid. Other times I've looked at them, there's very small volume. The options action on them is low. It just, no one's in them. No one talks about them, which I don't care about that part. But, you know, a long time ago, I was looking at maybe getting into some of these with some put spreads or running some callers and some different things. And you just can't do anything in that one. But yeah, so I think here's the thing. And so I'm going to agree with Marcus on this one. The magic of what Curve does is Curve is in the Tasty Trade ecosystem. So they're going to, the reason they do well is because they're doing monthly options. But having said that, the other side of that is, why can't a firm do monthly options and just budget, just pay weekly? Maybe you don't pay for the first month. I mean, you introduce your fund in June and you start paying July 1st, but you pay a fourth of what, you know, and just split it up that way. I don't really buy the thing but Jay acts like if they tried to do that, there might be some weeks, if they tried to go to weekly on a something that's running monthly, there might be some weeks that they wouldn't be able to pay a dividend or it'd be really small. Now, fair to mention also that Big Y, that's the magic of Big Y. Big Y is also in the monthly time frame. It's the only YieldMax one I know of in the monthly time frame. Probably the other Target 12s are also. But anyway, because of that monthly time frame, same thing. So I wish Curve would become more liquid. You know, I wish it become more popular. I just don't know why it doesn't have any AUM. I mean, it just kind of makes me sad. It just shows you how prevalent yield chasing is. And which is fine. I yield chase a little too, but it's almost like if Curve should be bigger because its yield is not that small. You know, it's not like it yields 5% or something. I mean, it still yields well. Yeah, 40% is still 40%. Yeah, agreed. T-SPY and TDAC will also have leverage version soon. Here's something else. I don't know if I learned this today, but do you know who the sub-advisor is of TDAC? Is the Tuttle Capital guy, the guy with BITK that's paying 350% or something. By the way, they declared a new dividend. It was 50 cents. So they paid $1.50 dividend and they declared a 50-cent one. So that means they paid $2 in 2 or 3 weeks, $2 in 2 or 3 weeks on something that started at $25, I think. You know, that's obscene. I think it comes out to 200% right now or something. Anyway, but the same guy is the actual option trader or the sub-advisor for T-SPY and TDAC, which is cool. And now that I've seen that guy's name before, and that's where. So that makes me think really good stuff about Tuttle Capital because they've been very successful with T-SPY and TDAC, right? Let's go look. I was kind of dogging on T-SPY just because I hate when something becomes the Me Too fund. And for a while, that's all you heard about is T-SPY. And it's great, but I'm saying you look, I mean, about half the funds I showed you are beating up pretty soundly. I mean, it's a fund. It does, you know, it does what it does. I mean, what did you do? You lost 130 on a Q call today. I hate to hear that. But yesterday you gained 600. All right, that's good. You bought $155 triple Q call for tomorrow. Oh yeah, we're doing that. Yeah, you're doing the buy the call every day. Okay. If you guys don't remember, guys, ZZ is doing the Q up strategy. Okay, I will. ZZ is doing the Q up strategy, which is putting a percentage of the, you know, for him, if you're doing $130 a day, you're basically rolling with say you have that 10, you could, you know, $1,300. He has a $1,300 account. He's putting about 10% of it a day. And you could do it with the 13, you know, that's about what you're doing. If you had a $1,300 account, put $130 a day in, or, you know, about 10%, As it grows, yeah, that's what happened. So then he gained money, the account grew, and then he bought the $155 call. Yeah, so you just kind of go up and down. Who knows? I mean, it's totally dependent on the market. I don't know why a fund doesn't do the same thing selling puts, maybe, but I don't know. All right, Marcus. Okay, yeah, T-SPY and QUSA. Let's look at dividend calculator. Do you think those can beat Big Y? Blocks Royalty? Probably. I'm just joking. QUSA and was it T-SPY? T-SPY and T-SPY. So I don't want people to think I'm dogging on T-SPY. I don't have any animosity towards T-SPY. They didn't invite me to Chicago this week, though. They're taking some other influencers, and we introduced their fund to Chicago, but that's not. But just, you know, it's just people don't understand the magic behind T-SPY is that it only pays 13%. It's a low, you know. That's where it's deriving its extra NAV from is the lower yield. Same, to be fair, same thing about Big Y. And also I kind of got off the T-SPY bandwagon when I've heard they were selling stock. I'm not into selling stock. All right, so here's QUSA and T-SPY. What is QUSA doing? Oh, this is different time frames. Why does it do this sometimes? I don't understand why it does that. Okay, there we go. Yeah, T-SPY is good. Now let's check. I say it's, you know, let's check and see what it actually is paying over this half a year. QUSA is a target fund, so we know it pays 15. I'm just curious. I haven't checked T-SPY lately. 15%, something like that. $3 on 22.51. I'm calling that 15. Mark's here. He can tell us what it is. But let's look at this one. I want to look at TDAC and T-SPY. Did they come out at the same time or different times? Why is that such a short time frame? Did they just bring TDAC out? This thing's just, I don't think this thing's really working that well tonight. I know I should probably use total returns. Or I should probably, I need to just build my own thing like the max factor. But you didn't see any, okay, so let's see what, we have some new commenters. Now, I've never seen your name in here before, Michael, but we have a lot of Mikes in here. My name's Mike as well. Max is just my option trader name, but we also have Mike K. And then who else do we have in here? At times we have Michael from the Philippines, and there's another one we have occasionally we have Mark and Marcus in here too. It's definitely the M name deal. All right, Michael, thanks for being here. You didn't see any dividend today for your QLDY. Okay. In my account to count for what's going on. I'm having a hard time getting a handle on that one. I did see that. Where did I see this? I saw that they declared 19 cents today. You didn't see any dividend for my QLDY today in my account. What's going on? Okay. Let's look at that. I'd be happy to look at that. Let's look at that because they publish all that stuff right here. So deck day, X day, record date, pay date. So they declared it today. It was 19 cents. Look at this, how steady this is. 19.5, 19.6, 19.7, 19.7. That's wonderful. So super steady. So they declared it today. They tell you what it is. So I think tomorrow's the latest you can buy the stock, but I always get confused on that. If you could, now you have to buy it on, anyway, whatever. Don't try to do that. But anyway, tomorrow's ex-div, or today was ex-div. Oh, tomorrow's ex-div. Anyway, it takes a few days to hit your account. The same thing happened to me. My account showed that I was down 10%, but it was because I had a 9% dividend come, or I was down 10% in one position, but I had a 9% dividend come out today. They declared it today, or maybe it was X. I think they declared it yesterday and it was X-div. Well, on X-div day, you come in and they've subtracted it from your NAV, but it hasn't hit your account. So between this is one weakness of these funds no one ever talks about, but between 10.10 and 10.13, it looks like you have less money than you really have. There's 2 days where and some of the brokers take longer to pay than other brokers. And it depends if you do drip or not. You guys probably know more about that than me. So what do you guys think about that situation? Yeah, payday's 10.13. That's basically what I said. I just wanted to check I just want to check and see what they were saying, what Defiance was saying. So if you didn't own it before yesterday, you won't get it. Oh, before yesterday. Okay. Now, Marcus, are you thinking it's tomorrow? I mean, it's only 11:43 in Philly. You mean if you didn't own it before today, right? Paydays every Thursday and FK. Yeah. So you got paid on Thursday for the Monday dividend though. So today was Thursday. So that should have hit your account, but it depends on your brokerage too as well, right? I mean, don't some of them hold it for even an extra day after that? Or I hear people gripe about it. I just drip, so I don't really think about it. All right, so let me try to catch up with this stuff. Total Capital filed lots. Yeah, I know, I saw them, and I'm doing a review on them tomorrow, and they look freaking awesome. I mean, incredible. They look awesome. I mean, very excited about them. I asked Mike Venuto, the founder of Tidal, about Tuttle, and he said that guy was a cool guy. He knows him. He said Matthew's a cool guy. But he said he's a venturous, right, or something like that. He said he's not afraid to take a chance or roll the dice or something. But he said he's a cool guy. So he said not afraid to break things or ask questions first and ask for permission instead of forgiveness or something. Anyway, so who knows? But I mean, he, I'd probably get along with him real well. But yeah, I'll do a review on those soon. I'm glad to hear, ZZ, that your stuff's working out. Okay, Robinhood is let's put this up. Robinhood is the latest pay. Always pays around 10 p.m. of every other, 10 p.m. day of every other brokerage seems to pay in the afternoon. Okay. So none of them pay the next day, but Robinhood's the slowest to pay, but it does pay. I thought some of them took an extra day, but no, that's good. It's almost like an extra day because if you don't get it at 10 p.m. the next day and you're running and you needed the money that day, it's a day of lost money or whatever. I mean, these things are still good investment or good investments. I need to work on my camera. Steven Spielberg, I am not. Do you guys like my block sound? That's I'm not. They don't. It's funny. Mike Venuto today was talking. Did you guys hear Kamir call in? I'm sure I don't know if any of you guys are in Kamir's room or anything. But anyway, he was on the live today too. Okay, Mike, what are you saying? Vanguard holds my yield max and round hill payments for 24 hours, but my NEOs are same day. Huh? Because that makes a difference if you're at the point when you're living off these, or just for not only that, because you want to have your money invested at all times. If you have one that pays an extra. Hang on, Jack's wants out. All right. Well, let's go back to the back tester, see if that thing ever ran. All right, let's go to the new max factor. Actually, we did run that. I meant to run it again, though. I want to run that one more time while we're talking about other stuff. So put any questions in there if you guys have them. Let's go back to the All right, the main database, and still think short term's jacked up. All right, well, I don't really have anything else to talk about. I don't know if we looked at this. Yeah, we did, the cumulative return. I was doing every day, but I forgot to do yesterday, so it's missing a day. But this is still the first day, and this is still the most recent day. So, but yeah, I have a lot of hope that the total ones, a lot of those are doing put spreads just from the early stuff I figured out. So another and owning stock, so it's going to be, or synthetics actually, put spreads plus synthetics. Or some of them are. I saw some of them that were selling put spreads. Some of them just put spreads, like Roundhill does. Some of them put spread plus synthetics. But anyway, the one I'm trying to review that they're doing today, and I was all over trying to get AI to do research for me to go dig up their trades, was the BITK. And they're somehow doing call spreads in that. Not even spreads. They're just selling calls. They've got to be using heavy leverage. I think you could do what they're doing. The way I would do that is I would do two deep in the monies instead of one. You know how what's the fun with QLDY? Hang on. QLDY has that one deep in the money option, the $2.3 million option that I'm always talking about. So what a fund could do, because think about that $2.3 million option that they have in the NDX represents $2.5 million worth of notional value. But wonder if, hang on a second. Oh, my computer's running poorly. But what you could do is what you would do, you probably want to use deep in the monies. You would use combos. So you could go out a year and you could buy an at the money call and sell an at the money put. The at the money call that you bought with the put that you sold would pay for the call. So you could do that trade for free. It's basically like owning stock. It's called a combo. It's the yield max trade. So instead of doing one combo, you do two combos, but you only have money on hand for one combo. So you double leverage it, and maybe they even triple leverage it. Do 2 or 3 combos, sell options on all 3 of them. That's how you bring in that big of a yield. And they are doing, and yeah, that's what they're doing. That's got to be what they're doing. They just aren't publishing their trades, but that's got to be what they're doing. Because they're selling calls, not even call spreads. But if you sold leverage calls, yeah, you could do that. We'll see. Anyway, I've emailed him. Let's see if he's got back to me. Probably not. Let's see. I checked it a little while ago. Stock tools, payment confirmed. Okay, good. Let's see. No, hasn't. All right. Well, but let's look at this. I want to look at this trade again. All right. So this lower batting average, you just take the 74% wins by not going so far out of the money. You still win a good amount of the time, but just not quite as far out of the time. I just think this optimizes a little better. And it tested since inception, the far out of the money one, I think, returned about a quarter of the upside of the buy and hold. This one was returning more than half, I think it was. We'll look in a second when hang on a second. This one's returning, yeah, well more than half, right? I think this one's returning like 3/4 of buy and hold. Anyway, I just think this optimizes a little bit out here, a little bit better. I'm also trying to show one other thing. This is actually going somewhere. I just go back and forth between stuff that's loading. Okay, short-term max factor. Now TSLP's there. That's more like it. TS2. What were we looking? That other list. This thing is so jacked up sometimes. Anyway, my apologies. But heck yes. Bobo has an error, but that's fine. That's just because the inception date's not showing up. I have to set this manually every time. I don't know why it doesn't save it. I'll worry about that later. We know Bobo's good. I think it still puts it where it should be, though. Or anyway, but yeah, now these are the good ones. Okay, short term, TSLP, of course, because I kept saying this just doesn't seem like the right list. Remember that? I mean, it had some good ones on. It had blocks on it. I guess it was just down here. It's like it anyway. All right, TSLP, TS2, AMDY. TSOI, Hui. Now, these are some good short-term ones right here. Bobo, iGold, Goop. A little bit surprised iGold's beating K-Gold. You're disappointed, I should say. Now, iGold's paying 15. K-Gold is paying, right there, 11. Right now, anyway. iGold went from 22 to 24. K-Gold went from 24 to 28. I mean, K-Gold has 16% NAV upside as opposed to 11. That's a big difference. That's a third, 33% more, something like that. K-Gold has an 11 vol. It's more volatile. Maybe Howard's taking a little bit more risk. I don't know. Or just whatever. It's been more volatile over this time. Total reach. I couldn't see Howard taking more risk on anything. iGold does have the yearly 30% total return. K-Gold hasn't been out yet for a year. Okay, I was just stalling to let the tasty trade hopefully load. This, okay, so yes, you got buy and hold was up 362%. This was up 277. It's about 2/3 of buy and hold. You got to, and that's good for an income strategy. And remember, this isn't the Lightning spread. This is only half of the Lightning spread. This is just the income component. So really, to do the light, you have to. So a couple things. You have to look at details, and you have to go. The only reason you're doing that. The only reason you're doing this is because of this number right there, 299. So that's how much you bring in. That's the average option you sell is worth 3 points more than the average option you buy. That makes $300. So that's how much you bring in on each spread. Okay. But when you add up losing trades and winning trades, the average, you only keep about 1/10 of that. You keep $20 per trade. $20 isn't bad for every day, though. Because over the course of this is since 2013, but it's $346,000 total premium on $8,500 used capital. So it's tremendously capital efficient. This is the engine that pays the yield. A Lightning spread is this plus this plus this. And let's see, we're going to use the 30-day time frame, or maybe the 60. We use the 60-day time frame. All right. So a Lightning spread is a 95 delta or even higher, but an all the way in the money call that's basically moving 1-to-1 with we could use a higher one, but it just 95 is about the highest reasonably. I mean, I guess we could use 99. We're going to use 95. 95 is fine. But you go out 60 days. Okay. So these other ones, you're just going out one day. So this thing it's only making $20. It's making $300. You're only taking home 20, but that's fine. You're just doing this part for the income. This is where you get your total return. I mean, or not this is where you get your upside. You aren't going to get any upside from, or not much upside from selling put spreads. A little bit. I mean, you saw it. You got about 2/3 of buy and hold when it was just put spreads, right? I mean, so, I mean, it's not like these things get no whatever, but I mean that, 2/3 of buy and hold is actually pretty good. All right. So now let's go over to the max factor short. So blocks is 13. I can live with that because when I was reading that, I was thinking blocks really isn't doing that great to be ranked number 3. I mean, but now that I know how it's working, I mean, it's actually 24% in a quarter and pays a 25% yield. I guess it was more K gold that I really couldn't understand, or because K gold is only 16%, only paying 11%. I just kept thinking there's got to be better stocks out there than these, and there was. We weren't seeing it. We weren't seeing GUI, Goop, iGold, Babo, Hui, and Tesla, AMD, TS2, and TSLP. Maybe tomorrow night we'll line up all the Teslas against each other. I'll try to have the Babo error fixed. And we'll line up all the Teslas, and that will be our battle royale tomorrow night. All right. So ZZ says Fidelity's the earliest. Marcus is saying if anyone needs an all-in-one precious. Yeah, I haven't checked that out. Do they pay a yield? I don't think they do, because I would have been all over this already. Let's compare glitter to GDXY. Probably not a fair comparison. Oh, look at that. Look at that. Wow. Now, definitely better NAV. Definitely better NAV. Well, this GDXY was down in NAV, and this was up in NAV. So definitely better NAV, but no dividend, of course. Yeah, let's see if you added the $10 back in. Even if you added the $10 back in, you would have gone from 19 to 26, which is good, but you would have had a 0 dividend. So it's still been the same result. So 30, so you still would have been behind glitter. Yeah, that's a good one, Marcus. I think I've looked at that before. That is a good one. Let's look over here at FinViz. Is there anything else you want me to run against QUSA? Let's see. Let's check out glitter on FinViz and see. Jackson, what do you want? He's like, this is boring, Dad. And that's a good looking fund. Did they pay a dividend today? So it's not only, it looks like metals were down. I mean, let's look at GDX. I think I got double hit because evidently gold was down and I paid a big dividend. My fund paid a big dividend. Well, whatever. I didn't know this could take so long. Yeah, that's what it was. So it's both. That sucks. I was hoping I'd get all that money back tomorrow. I probably will. The other day they were down. They've been down. They were down big 4 days ago, but they rallied before the end of the day. They were down big 2 days ago, but not that big. Oh, well. Let's look at glitter. Precious metals basket. So that yeah. Huh. How much under management? Looks like 1.8 billion. Did you hear old Mike Venuto talk about BLOK? Do you guys know what BLOK is? From Amplify, from our friends over at Amplify. Amplify and Simplify, and I get them mixed up, but they both can have some good ideas. I mean, some interesting funds. I'm often enthused. Now, we don't really talk that much about them. I guess they aren't that cool. Some of the Simplify ones are all right, but they aren't cool enough where they make the crypto quartet or whatever. So, but this is cool. Mike had some great stories about this. This is a hedge fund. This was I'm trying to think. This was a transitional data sharing ETF, Amplify. He was, let's see who they have in here. Yeah, look at this. Cypher, Galaxy, Robinhood, CleanSpark, Coinbase. He was saying they bought IPOs in here. He's saying they restructured companies in here. In other words, that when a hedge fund restructures a company, they'll buy equity from the company, deal with the company, and then the company will, reissue shares or whatever. They can do that. That's basically what a hedge fund does. So I never realized this before, but this one's a hedge fund also. Now let's see how much under management. Yeah, 1.5 billion. And I mean, this is, Mike said that he started it. I don't know if this was while he worked at Tidal, if they did it for Amplify, or maybe Mike used to work, before he worked at Tidal, he may have worked at Amplify, or he worked at Direction, or I forget. He worked for a big firm somewhere, several of them. He got his start in precious metals, or he was working for a firm that had a big, we'll ask him next time he's on the show. They had a big, I think it was a big gold fund. That's kind of how he got started in ETFs or something. Anyway. But yeah, anything that has Cypher, I mean, look at Cypher. Where did this thing come from? I mean, why can't I make a freaking scanner that anytime something goes from 5 to 10 in a month, let me know about it, or less than a month, right? August, September. I mean, something doubles in less than a month, let me know. But that's I wouldn't buy it anyway, because I'd be like, it's doubled already. I'm too late. Well, they have some normal ones in here too, but yeah, it just impressed me. He was go listen to that interview, but he was talking about the stuff they can do in here, and it was a lot more than just IPOs and restructuring companies. They've done all kinds of stuff in here, and he was really proud about this because they have a great record, and I don't blame him. I mean, it's a 96% 1 year return. Look at this 3-year return of 5-year return of 203%, 3-year return. I mean, something to be proud of. It was a great Spaces. Jonathan's probably not here anymore, but go listen to it. Can you explain gold? Oh, yes. Well, I don't know. Can I explain it? But I wanted to say something about my GDXY dividend. And it was the first thing I talked about. I said, remind me later. All I was going to talk about was when you have gold futures. Gold futures, and not only gold futures, but commodities generally can get higher vol as the price goes up. That can happen to oil, and it does happen to oil lots of times, and it can darn sure happen to gold. So what the thing is, that changes the dynamics of covered call funds, because kind of the deal is with covered call funds they don't lose as much on the way down, but stocks usually go up. So, but the kind of the knock on covered call funds is, when stocks do go up, the IV gets crushed and your dividends get super small. And so the counter to that is, but when the stocks go down, my dividends go up. Gold's the opposite. It can be. And I think that's happening lately. In fact, let's look at that really quick. And then I'll answer your other question. I just wanted to talk about this really quick. And it has to do with something called Contango, and it has to do with gold futures. And that's maybe where I thought you were going, and it reminded me of it. But I'll answer your question too. but it has to do with something called contango. And it's a condition futures are in. They can either be in contango or backwardation. And it depends on where 1 month is priced in relation to the other month. And depending on which one's priced, it will either, depending on if the near month is higher or if the near month is lower, it'll either be in contango or backwardation. Anyway, when it's in contango or when it's in backwardation, it's no longer a tailwind to sell options. There's actually it changes all the dynamics. In other words, it makes it where there's a condition where you can have the price go up and the volatility go up. So you can have one that's paying a bigger dividend as the price goes up. And that's cool. So that's the one thing that's different about the gold. And that's also an oil too, than some of the other ones. This actually, the same thing happened in Mr. Because it can happen in stocks occasionally too. And it's like the perfect storm when it does. So let's look at Mr.'s historical volatility. November, yeah. Okay, now let's look at Mr.'s historical price. Okay, Mr. went from 200 to 500. At the same time, its volatility went from 100 to more than 200. So it's optioned. Options can have a term structure also, just like futures. But anyway, it's options term structure inverted, and it's a rare condition when it does that. And it's the perfect storm because your NAVs go. It's like free money. Because typically on stocks, it's the opposite condition. Now, on gold, it's typically this condition. So gold and oil may be good covered call funds to look at. Maybe we ought to, just knowing that, how that works. Now, I'll get back to your question. Thanks for being here, Jameson. I've seen you in here before a couple of times. I appreciate you being here. So can you explain the gold futures like hell? I mean, I'm not an expert on futures. I've traded them a few times. I don't know if that's what you're asking, but a gold future, a future is a little bit different than an option, but they're both derivatives. And they both have a premium built in. And they both have leverage. Just think of an option like a future. I mean, futures like combining an option and a stock. A future trades more like a stock. It doesn't have strike prices. It just has a big number, and the big number is what it said. And you try to buy low and sell high. You don't have to worry about strike prices. They do have different expirations in futures and stuff, but so basically, if they're buying gold futures, they're just using gold futures to get exposure to gold. The thing the futures also do is they have leverage, and I don't know if they take advantage of it, but that futures they probably do. They probably are. Who knows? Futures are a real efficient way to get in and out of stuff. So another thing is because you can't buy gold. You can't buy gold stock. There's not a gold stock. There's GDX. There's GDX, which is kind of a gold stock because it's gold miners. But if you're going to be in gold or oil, USO does oil futures. GLD does gold futures. GLD does. So the high yield funds that trade off GLD, like GLDI and YGLD and GLDY, those use futures for the underlying. So it's just instead of the stock. And you can also, futures also have synthetic. Well, futures have options. So you don't only have, you can also use futures options to synthesize stock. But it's just a derivative, basically, derivative with leverage. Waiting for KP10 to come out. What is, I've seen that one before. I've checked it before and I keep forgetting what it is. KPTN, let's just go look. But that was cool. Did you get my point about micro strategies? That's just the perfect way to illustrate it. That's one of the only examples I've seen. I think Tesla did that. You remember for a while, Tesla seemed like free money to people. The summer 2024 or 2023, it was a similar condition. But micro strategies is the greatest example I've ever seen of it. It doesn't usually happen. Like you could see, they both reversed, and then after that they both dropped. So people, that I think that's why a lot of people think Misty's so good. People that were in it during that ride up, because it's just, but it just, when it went the other way, the price in the meantime has gone from 500 to whatever it closed at today. Was that probably 3.25 or something? 340, 3. Anyway, so not quite 500, more like 450 to 300. So it'll come back hopefully, but it's a kind of a double hit, because in the same time frame that the IV never recovered, and there's nothing the fund can do about it. So the IV, went from 200 and it's basically almost on an all-time low. I guess it's right at the long-term average. The red line, I think, is some kind of average. Or no, the red line's the previous close. So it's right at the previous close. But you can see, so it's kind of like a double whammy. Like this was really a double whammy for Misty, is between, is into the April lows. Into the April lows, it lost half its price, and it went from 200 to, of all of like 68 or something, so nothing you can really do about that to predict that in the future. But if you ever get in a thing like this where you can get the vol and the price go in the same direction, it's a good thing. I was going to look at GLD and see if we could find an example of GLD doing that, which I would guess we can. Yeah, lately GLD's vol has gone from 15 to where it sits today at, I can't really tell. It's hard to tell, but 20 or so. Its vol is going up and its price is going up. But its price has only been going up. So let's look at when its price is going sideways. So between May and July, its price went sideways. Between May and July, vol went down. But then as soon as the price went up, vol started going back up. So that's a good situation to be in when they go the same direction. That's not as big of an example of it, but that is an example. It has been going the same direction. All right. There was another question. It's Curves Platinum. Pete. Yeah. Oh, that's right. I guess I've heard that before. Okay. Platinum. Okay. Well, when's it coming out? Okay. Yeah. I knew the Pure Metals Growth one. I figured that one probably had all of them, probably had the whole lineup. And Palladium too. Yeah. I figured that. I don't know if that was a great exercise. I don't know if that's what you're looking for, Jameson, on that description, but they're using gold futures as the underline. Think of it as stock. It's like stock with tons of leverage. Yeah, agree with you on that. We're all waiting for that to come out. Okay, and that was ZZ who initially mentioned that, not Marcus. All right, I'm making sure I haven't missed any of these. I'm getting pretty tired. It's 11:15. There's 11 of you guys here. I haven't checked the whole time to see how many there has been. It's not that big of a deal, but we've been getting a lot more people out here. So anyway, it's late at night. I'll let you guys go. Appreciate you all for being here, and I'll be back in the morning, probably about 9 o'clock. Unless there's any last minute questions that come up, I'm always willing to answer them. But yeah, I thought we had a pretty good live stream tonight. Like I told you, everything I wanted to talk about. So we'll call it good night for now. See you, Froggy. Yeah, thanks for being here, all of you guys. I appreciate it. I'll talk to you later.